Alright guys, welcome back to another video. It seems like things aren't going to get back to normal as everyone has hoped, because New York governor has officially extended the stay-at-home order until May 15th. But hopefully everyone's staying safe and indoors. And let's get started in today's video. And we talked about a few billionaires in my past videos, and today we're going to talk about another billionaire. His name is Ray Dalio. And just in case you're not familiar with Ray Dalio, he's currently worth around $18 billion. And he founded Bridgewater Associates, which is the world's largest hedge fund, currently managing around $160 billion. This article was published 2 days ago. And it says, billionaire investor Ray Dalio says you'll be pretty crazy to hold bonds right now. If we scroll down, we see his quote. It says, if you're holding bonds that gives you no interest rate or a negative interest rate, and they're producing a lot of currency, and you're going to receive that, why would you hold that bond? So because the current pandemic has stopped the economy and the United States government printing $2 trillion in addition to the ever-growing debt that the consumer and the government has, Ray Dalio is basically saying that inflation is going to be inevitable, and as a result of inflation, the value of the United States dollar is going to go down thanks to the current zero interest rate. Continuing to the next paragraph, bond buying by the Fed is seen contributing to the fall in Treasury yield this year. Once again, because the bonds are not going to have high return like it used to before this whole pandemic, Ray Dalio is saying holding bond is not the smartest move at this time. In addition to saying that you're pretty crazy to hold bonds right now, back in January of this year, he also said that cash is trash. I'm sure you might have seen articles like this. And it basically came from the CNBC interview back in January in Davos. And I wanted to play a clip of that particular question and his response.
Had texted into the show on Friday and suggested right now that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
I think that's most likely.
But then the question is, when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is, you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out.
If you want to listen to the full interview, you can definitely check it out on the CNBC YouTube channel. But if you scroll down, all the comments are basically saying how the interviewers aren't doing that much of a good job. Like Mike, he writes, if you're not a billionaire, please sit quietly. Or even Daniel saying, for Dalio, this must be like talking to arrogant children. And I just thought that was pretty funny. Once again, this interview happened back in January before the whole coronavirus pandemic. As you can see in this article, Ray Dalio says cash is trash, and he advises investors to hold a globally diversified portfolio. And up until that point that the article came out, January 21st, I think, the market has been rallying like crazy. And this is the 1-year chart of the S&P 500. But if you take it up to January 21st, the market has already gone up 14% in 1 year, minus what's currently happening right now. So people basically see this headline or go back to this January interview and see that this billionaire is saying that cash is trash. And a lot of people might read this and basically say, oh, he doesn't know what he's talking about. You need to have cash because look, right now with the market sell-off, if you're not holding any cash, it means you're basically 100% invested, which means you lost a lot of money during the market crash. Or if you don't have any cash laying around, you won't be able to buy the deals that's happening currently in the stock market. Another thing people like to bring up is that they say, oh, Warren Buffett, who's the CEO of Berkshire Hathaway, he currently has $128 billion. So it's basically Ray Dalio going against what Warren Buffett says. Mark Cuban, who we spoke about in my previous video, he's also holding cash right now because he can't see any good deals. And even with all the backlash, Ray Dalio, he's come out again saying he still thinks that cash is trash. And in a Ask Me Anything Reddit thread, he does go into more detail and he clarifies what he actually mean when he said cash is trash. That's one thing that is very important. All these headlines basically saying Ray Dalio says cash is trash or Ray Dalio warns cash is trash. It basically for people who don't read through and understand what he's actually saying or watch the full interview, they might simply read the headline and they might be swayed with what the business websites are trying to say, because once again, cash is trash is much more clickable than a full-blown explanation of what he actually means. So what I want you to remember when you read through articles of any sort is to not just read the headlines, but go in deeper to see what they actually mean. Let's go to that Ask Me Anything Reddit thread. So I'm Ray Dalio, founder of Bridgewater Associate and author of Principle, Ask Me Anything. So one of the questions I was asked is, "Hi Ray, big fan of yours. A few months ago you said cash is trash, but now cash is king." So he's asking if he still thinks that cash is trash. You can pause the video here if you want to read through Ray Dalio's answer, but the gist of what he meant and what he is clarifying is, compared to different investment vehicles like stocks, bonds, or even gold, he's saying that cash is not a good investment long term, because as we can see right now, the government is printing lots of money to prop up the economy. So the value of the cash that you're holding in a bank account is going to depreciate in value. I think they said inflation is about 2% every year. So if you're holding $100 this year, to next year it's not going to be worth that $100 exactly. It's going to be worth $98. So you lose $2 worth of purchasing power because of inflation, because the government basically says that they're going to print unlimited money to prop up the economy. Inflation is going to erode the purchasing power of your money more substantially. So that's what he meant by cash is trash, because cash by itself isn't going to yield anything compared to if you use the money to invest in the stock market. Sure, it might be very hectic and volatile like it is right now, but in the long run, stock, bond, gold is going to definitely outperform just holding cash. Because if you watch this interview in its entirety, he says there's two purposes of money. First purpose is that it is a medium of exchange, and the second purpose is the storehold of wealth. And he says that even though cash is a good medium of exchange, it is no longer a good storehold of wealth ever since the United States got off the gold standards. Remember, he's saying that cash is trash in the long term. If you're thinking short term, then of course it's important to have, because if you hold cash right now, you'll be able to take advantage of the market dips and buy stocks when uncertainty is at its high. But over the long term, that's when he's saying that cash is trash, because it doesn't appreciate or store values because of inflation. And of course, one way to mitigate this is, if you have any cash laying around, is to put it in a high yield savings account. I personally use Markets by Goldman Sachs. With the Fed lowering interest rate multiple times in March, the interest rate has unfortunately gone down. Currently, if you open up a high yield online savings account, you're going to get 1.55%. But it was only a couple days ago when it was 1.7, and I remember when I first opened my account, I used to get interest of I think 2.2, but then it went down to 2%, then went down to 1.7, and now the most recent amount is 1.55. This is why, going back to the first article, he advises investors to hold a globally diversified portfolio. I think his recommended portfolio has a bit of stocks, bonds, and gold. Basically, each part are able to hedge against each other. When the stock market goes down, bonds typically is going to offer that counterweight in addition with gold. During hard times and uncertainty, people naturally rush to gold and more safer investments. So by holding a bit of gold and of course allocating it based on your risk tolerance, you'll be able to get through a lot of recessions without having to worry excessively. So in the end, when you want to invest, think of how you want to diversify your portfolio, and also try to gauge what your risk tolerance is going to be. If you feel like you're able to weather more volatility, you can definitely buy more stocks because they're the most volatile. The next one would be bonds, which is basically a loan to a government or a company. And after that might be gold. And the last thing that you should hold if you want to see appreciation is cash. Because once again, cash by itself is not working for you. And in order for you to build wealth substantially, you need every dollar that you have working for you. Cash in under the mattress or in the high yield savings account is not going to yield you as much as if you deploy that cash into the stock market to buy companies like Apple, Coca-Cola, or McDonald's, who are going to naturally appreciate in price, and a lot of companies do pay you dividends. So this is why Ray Dalio says that cash is trash, because it's idle, it's not working for you. But also remember, cash is trash in the long term. Short term, it's important to have some amount set aside so you can dollar cost average into the market. Like for me personally, I try to hold at least 10% of my overall investment amount in cash. So as the market goes up or down and I see buying opportunities, I'm able to deploy that cash that I have set aside. But you have to also realize, just because a billionaire, Ray Dalio, he says that cash is trash, that doesn't mean that that advice is applicable to everyone. Remember, Bridgewater's associate, it manages $160 billion. And most likely their clienteles aren't average people who have less than $1 million. It will be institution money and pension funds who has billions and billions of dollars. We're trying to grow that money. So for people who are living day to day, paycheck to paycheck, I don't want you to read this headline and be like, oh, if a billionaire is saying cash is trash, that I should put everything I have into the market, because that's not the way to do it. Before you start investing, always make sure that you have money set aside for emergencies, because a lot of Americans aren't even able to cover $400 emergency expense. So by having cash on hand, it's going to prevent you from going into debt if an emergency does come up. Once you have that emergency fund set up, make sure you have cash set aside that you're able to deploy into the market. Remember, cash that is working for you to grow your wealth is not a waste, it's not trash. Only when cash is left aside, basically being eroded by inflation, that's when it becomes worthless, because every day that goes by when the money isn't working for you, it's losing its value. If you want a more detailed explanation of why Ray Dalio's advice might not be applicable to everyone, watch this video. The one thing I want you to remember as you continue on your investing journey is to not just get swept away by the headlines. Remember, all these news websites are trying to get eyeballs on their website, because that's how they get advertising money. So they're going to try to bait you with catchy headlines or controversial headlines like, oh, Ray Dalio said cash is trash. But make sure you do your research and you figure out why someone would say such a thing, why Ray Dalio, this billionaire, would say cash is trash. And even though you understand what he is saying, make sure you figure out if that fits your current situation and what you're trying to achieve with your money. Because remember, right now, from our February high, the market is still down about 15%. And if you had money set aside, the 10% that I have set aside, or whatever amount that you decide to have, if you're able to get in on this market sell-off, eventually the market is going to go back up, like we have a rally right now. So if you do have money and you have cash set aside, you're able to take advantage of this unique situation and grow your wealth faster than people who bought at the very top and have no money to dollar cost average down. This is why taking advice from Warren Buffett and seeing why he has $128 billion set aside, or listening to Mark Cuban and also understanding why he has money set aside, because he basically foresees the market going down lower. And if the market indeed go down lower, I think you would want to have some cash laying around to take advantage of the market dips. Alright, I think I'm going to end the video now. Thank you so much for stopping by. Stay indoors and everyone stay safe. And if you like, subscribe for more shenanigans. I'll catch you in the next video. Alright guys, bye.